Hi, Matt McAleer, Director of Equity Strategies, Cumberland Advisors, just after the close on January 11th. I want to touch very quickly on bonds, specifically munis, after John Mousseau was on with me last week. Very strong demand again this week for munis. We love to see that. Strong demand helps that pricing in that market tremendously. Some nice new issues that the team's looking at as well. So you may see some additional bonds in your portfolio over the next week or so. Over on the equity side, I believe this is the first week since we started doing these videos that the markets were actually up, so I get to smile a little bit. Domestically, we talked last week about how important, how constructive that Friday move was off of Thursday's weakness. Thursday's weakness started to challenge those December 24th, those Christmas Eve lows. Friday's real strength put in that higher low. Higher lows are what we're looking for in repairing of a market. Keep in mind, we've talked about lower trends in the markets. We are working off a V, off lower trends, not the highest probability recovery. May have to do some more work, similar to 2011. This market reminds me in a different context. It's not a currency crisis, but the market action reminds me very much of 2011, where we made highs in late May, had a drastic 20% drawdown intraday in the S&P into late August, rallied, pulled back around Halloween, looked like we may fall apart there. Don't forget, in 2011, we're only 2.5 years off of 08. Everybody talking about another crash coming in 2011, but we're able to make a higher low there around Halloween and start moving higher. So from June to Halloween, early November, that was a 5 or 6 month period. We may go through that again. We're 3 months in. If you look at the third week in September, September 20th, high. We're now repairing. So U.S., we're fully invested. What helped us this week? Energy and biotech helped us. Energy, as everyone knows, client-wise, has been a hole in our pocket. The cheapest we added to XOP was $27, small rebalancing there. We're at $30. We have a cost that still needs work there. International, been talking about it for a few weeks, still trading above those October lows. Very encouraging. Emerging markets more than developed markets. We're leaning a little heavy to emerging markets. As a matter of fact, with the weaker dollar, we added another emerging market play this week, South Africa. Traded very well after we bought it earlier this week. We continue to have strength in Latin America and Indonesia. Those are our three strongest plays. Germany and France, while they had strength this week, they didn't see the kind of thrust we're looking for. Developed markets still struggling. Probably have to work off some higher lows there. Probably some back and forth action. Tactical, we added some transports to our position this week. They traded very well post-addition, like most of the market did. Still sitting with a good slug of cash in our tactical account, really looking again to that 2011 model, where I think we're going to be able to put money back to work at levels that are more attractive than today. Try to make a higher low above last Thursday's lows. So it'll be a grind. Talked earlier, a month and a half ago, we don't get too high, we don't get too low. Try to look as far out as our headlights will allow us and try to guide that capital home. Have a great weekend. We'll speak to you next week. Quick note for clients. We heard from many clients that they've enjoyed this video, but from others they didn't know it was available. So this week we're sending all clients a link to this video through their email. You will be able to access it through the link, or always understand you can go to our Cumberland Advisors YouTube channel. We'll be doing a weekly video to try to be transparent and let our clients and friends know what we're doing on the trading floor in both equities and fixed income. Have a great weekend.